Alrighty, good morning everyone. Thank you for joining us this morning. This is going to be a very similar format to what we've been doing the last couple of times. Stu will take us through the quarterly report released this morning, and we'll have a short Q&A session afterwards. If you could please use the Q&A button to ask any questions. I've actually turned the chat feature off this time so I don't miss any questions like last time. And you should be able to also like any questions. So I'll try and get to the questions with the most likes first. And we'll get through as many as we can. And if we can't get through, then we'll endeavour to get back to you via email or phone. Cool. Thanks, Stu.
Thanks very much, Emma. And thank you everyone for joining today's quarterly results and activities for the third quarter of the financial year 2024. As we move through the quarter has been a successful quarter from the perspective of we've had strong and record quarterly production from the Walyering gas field, where we produced 2.29 petajoules equivalent of gas and condensates, which was a 17% growth on the previous quarter. That generated around $18 million in quarterly sales, which were up around 22%. And that's also a result of an increase in our realised price to $7.54 for the quarter, which was due to a slightly softer US dollar to Australian dollar to US dollar exchange ratio and the commencement of the Alinta gas sales arrangement over the next couple of years. The facility itself performed incredibly well. We have maintained full availability of the facility, and on occasions we have even exceeded the facility's nameplate capacity, reaching 34 terajoules a day during February, as well as reaching an instantaneous delivery of around 38 terajoules. That gives us confidence as we move into the coming quarter, where we will be drilling Walyering 7, having executed the gas transportation agreement with APA, that we have latent capacity in the facility in order to meet firm gas deliveries in excess of our existing 25 TJs of firm gas contracts. Also successfully during the quarter, we acquired the long-awaited and very exciting Ocean Hill 3D seismic. That campaign has been long in the works, with a number of landholders and community engagements that have been required in order to get that away. It's been a real boon for the business in order to be able to achieve a high-quality data set over what is a very large and important 306 petajoules of contingent resource. And then lastly, our balance sheet continues to remain strong. We've got around $91 million in liquidity, and we continue to pay down our existing debt with only $16 million of drawn debt in the Macquarie facilities outside of our Rabobank agricultural facility, which is secured against our farmland. The quarter's financials, as you can see here, gas revenues of around 16 million, with condensate revenues close to $2 million, generally up about 22%. Quarter on quarter, we don't have year on year at this stage to compare to, but realised pricing was strong for the quarter. As I said, gas pricing of $7.54 and realised condensate pricing due to the foreign exchange rate and strong oil price during the quarter of around $119 a barrel. The business had another busy period of time in our gas acceleration strategy, which remains fully funded, and that we spent around $19 million of current capital in the quarter and incurred around $31 million of cash out the door. That cash out the door was made up of the remaining invoices from the South Erregulla 2 and 3 drilling campaign, the South Erregulla 2 and 3 testing, long lead items for our forward 3 well campaign, and as well as some costs incurred for the Ocean Hill 3D seismic. That left the company with cash on hand after revenue generation of around $45 million of cash, and we retain a $47 million of undrawn debt on our balance sheet, with around $91 million going into the coming quarter, where we expect another strong quarter of cash generation and our final 3-well exploration campaign as part of our gas acceleration strategy that we committed to in early calendar year 22. Just as a little bit of a few highlights from each of the business units from our production, as I described, we had a strong quarter of production from Walyering, and we're looking and expecting to be able to take that facility up to its nameplate capacity with the success at Walyering 7, should that be the case. We're looking to take the rig under our rig sharing arrangement with Mineral Resources on Thursday, Friday, depending upon the delivery of their final activities. And then it'll be a short mobilisation before spudding that well, and we expect to see that well result in the month of May. That is an exciting well for the company because we are drilling that well, Walyering 7, from the production facility on the old Walyering 6 well pad that's been extended somewhat, and that will allow for a very quick and short tie-in back to the facility, which is estimated to cost around $1 to $1.5 million. That tie-in should then provide the additional reserves and production capacity in order to start to push additional gas into as available and firm contracts that will look to secure, underwritten by our gas transportation agreement, backhauling up the Parmelia across to the DBP. In terms of our two key development assets, starting with West Erregulla. West Erregulla, we worked productively with our partner Warrego Energy, a fully owned subsidiary of Hancock Prospecting, throughout the quarter, and Australian Gas Infrastructure Group. The primary environmental approvals continue to move through their appeals processes, and we expect those appeals to be cured during the month of June, where on success the ministerial statement would be delivered and facilitate a Q3 FID, which is what Strike is currently targeting. That FID will be on the upstream facilities as well as AGRG's midstream facility, which will support the 87 to 90 terajoule a day development of the existing 426 petajoules of West Erregulla 2P reserves. The production licence was submitted during the previous quarter, and we're expecting that to be turned around quite soon. And the field development plan has been submitted to the joint venture to go through its joint venture processes. So outside of some documentation around the midstream development and gas processing services arrangements, the West Erregulla asset is moving towards its FID, and we're really excited to be doing that in the coming quarter. That's a really substantial, long life and meaningful cash flow for the business. During the quarter, we had some unfortunate setbacks at South Erregulla, which were quite material in nature. That was the flow testing of South Erregulla 2 and 3, which I went through during the half-year results, which generated non-commercial flows of gas to surface as well as anomalous water production. We're still working through the impacts of the South Erregulla 2 and 3 flow testing on the further up-dip nature of the South Erregulla structure coming out of the well to seismic ties. But what can be deduced is that the water that flowed to surface was fresh in nature, as fresh as the water that comes out of your tap. And that water obviously really messes up your resistivity in your petrophysics. And the reason why we probably weren't looking to screen fresh water in terms of our drilling results when we were getting mud gas resistivity measurements and even pressure gradients that suggested successful gas intersections at the South Erregulla 2 and 3 wells, was that if you place that fresh water through the petrophysical analysis at South Erregulla 1, you certainly wouldn't have generated the 80 million standard cubic feet a day flow rate that well achieved. So we are finding a high degree of complexity throughout the Permian structures, and we continue to find our geological models are evolving as every penetration comes through. What is positive, though, is that we do see a reserve in the eastern compartment of South Erregulla, which we will look to support a standalone development there, which, based on the reserves, which will all be a smaller reserve than the existing one that has been booked previously, is likely to support a standalone development, which we will come out with full details prior to the end of the financial year. Moving to other key corporate activities, we announced our cost out initiative of $1.5 million on an ongoing annualised basis, and we have achieved about 33% of that so far, with the remainder of that on track. About 50% or so of that is Walyering operational costs as we get higher degrees of confidence in the facility and we move the facility to a full unmanned situation. We also announced a buyback of our unmarketable parcels. We expect to be able to reduce our number of shareholders by about 9 to 10% as a result of that process. and that will significantly reduce the administration costs and time burdens that are sometimes placed on the business managing the very large shareholder base that we have as a result of the series of equity transactions that we have done in the past. Moving on and starting to look forward to the future activities. We just put out an exploration update, and that exploration update included the conclusion of the Ocean Hill 3D seismic, which was acquired on schedule and under budget. As I said, that 260 kilometres squared of 3D seismic is covering the 306 petajoule equivalent 2C contingent resource, where the South Erregulla 1 well drilled in 1991 by Sagasco flowed gas to surface. Very similar to Walyering. Walyering has been a dress rehearsal for Ocean Hill. We're hoping to apply high-resolution modern 3D seismic to existing poorly placed and poorly executed wells on Jurassic structures to understand the reservoir laydown. Given that the rocks are very similar from Ocean Hill and Walyering, we have a lot of proprietary information that we're looking to apply there. And I'm very excited to see that first series of data to come in. I think we'll have a rushed cube in May with a series of other higher quality products throughout the rest of the year. Should the balance sheet continue to support through strong cash flow generation at Walyering additional discretionary activities, we may look to place an appraisal well in Ocean Hill 2 into the field towards the end of the year, early next calendar year. Moving to the last piece of seismic that is currently underway right now, which is the Erregulla and Kadathinni 2D seismic across EP503, 504 and 505, all 100% owned by Strike. This 2D seismic covers the significant what I'd like to call LNG upside closure in the Permian. It's the sort of new frontier of the Permian out to the east, as significant number of well results have really brought the play in from the north and from the west and certainly to the south. The east continues to be on trend with the depositional environment that we're looking to secure, and we have seen strong results all the way to the most easterly wells being West Erregulla 4 and South Erregulla 1 and North Erregulla 1. So we're hoping that 2D seismic shows us some of the early signs that we saw from the legacy 2D that we reprocessed, as well as the Mayo 2D seismic, where we saw brightening on seismic around Kingia level in the Permian there, because that could really present some interesting opportunities going forward for Strike's exploration campaign, should there be a future and potential opportunity to access Northwest Shelf through the LNG exports. Lastly, through the acquisition of Talon Energy, which occurred in December, we are now in the L7 joint venture with operator Triangle and non-operated joint venture partner New Zealand Oil and Gas. We'll be looking to drill the Booth 1 well into that Permian structure. It will pass through some interesting Dongara-Wodgina oil potential on the way down. That well should kick off in around June, and that's another potential catalyst coming in the next quarter. Just as a quick update on how the quarter went from the energy markets perspective, we had another strong quarter of gas sales or spot gas pricing at over $9. We've now had over a year of greater than $9 in the spot markets. The interim report from the Economic Standing Committee was delivered, and that sort of had a series of findings that I think are important for Strike's core and base business, as well as a potential upside opportunity. The core and base business is domestic gas business, which is supported by rising price environments, which the AEMO is forecasting. The Economic Standing Committee continued to find that those forecasts were accurate in nature, and there was nothing to suggest that there was any inaccuracy in those forecasts. Those supply shortfalls, if they do materialise, will result in higher energy prices in the latter part of the decade and will threaten the state's decarbonisation agenda. And that's why we see Strike being central to the West Australian energy transition, as a large portion of our domestic gas production will look to come online in the second half of the decade, where we're targeting 4 sources of gas to be online by the end of calendar year 2026. There's a potential for the LNG export ban to be lifted on Strike. Any change to that regime will be a positive step for Strike, given where the current status quo has us only being exposed to the domestic market. And then finally, that there was some recommendations that potentially some of the domestic market participants through the LNG producers had not necessarily been meeting the spirit of the arrangements. And we have seen Woodside, as a result, push some additional domestic gas into the market over the next couple of years, which should largely arrest some of the shortfall concerns. If those shortfall concerns do not materialise, that obviously gives a larger opportunity to the state government to look to repeal in part or in full the export ban placed on Strike. And as I said, any change to the status quo will be a material positive to our business case. BHP announced during the quarter that they will look to build additional gas-fired electricity generation up in the Pilbara to support the rollout of additional renewables. So whilst we may be seeing from the previous quarter, Alcoa making comments around the reduction of potential gas supply going into some of their facilities, that's being offset by electricity generation. And that electricity generation is also being seen in the residential and commercial markets. The little chart you can see on the bottom right-hand side shows you the first quarter of electricity generation in terms of dollars per megawatt pricing, a really anomalous quarter. And just generally, we're seeing year on year increasing in average realised pricing for electricity. During the 18th and 19th of February, we had those very hot days. We saw two breakout new demand days of about 4.2 and then 5 gigawatts of electricity demand, which was hugely supported by gas at around 60% of the fuel load at 6 p.m. Electricity markets are driving new gas demand, are driving gas pricing in the state. And this is something that I would suggest all investors continue to keep their eye on because this is a really big, significant driver of the economics and underlying economics of our business. So finally, just to close out, we've got a big year of catalysts that remain. We have our 3-well exploration campaign, Walyering 7 appraisal well, followed by Erregulla Deep in partnership with Warrego Energy, a fully owned subsidiary of Hancock, and then moving into the Booth 1 drilling. Those 3 wells have a significant opportunity of replacing or adding additional 2P reserves, which would be larger than the 2C resources that were lost during the South Erregulla appraisal phase. South Erregulla, however, will conclude its reserves review and will release its additional development plan before the end of the financial year. And I do see the existing South Erregulla reserve supporting a standalone development there. And then we should conclude the year by delivering volumes from Walyering into the DBNGP through our recently executed gas transportation agreement with APA for their Mondara crossing. A few contingent events that may occur outside the domestic gas policy as the ministerial approval for the West Erregulla Environment Plan, followed by West Erregulla's FID, and subject to balance sheet support. We're looking at potentially an Ocean Hill or a further Walyering well towards the end of the year, potentially early in next calendar year. The business remains fully funded, and we are at the end of this quarter will conclude the one-off activities of our high-profile gas acceleration strategy that has the support of the West Australian government, and then we move into deliberate development opportunities at both West Erregulla and South Erregulla that will be supported by their own standalone financing packages. So the company remains well funded, and there's a lot coming in the coming quarter, and I would continue to keep investors interested and keeping their eyes on what Strike's activities are in the coming weeks to months. Back to you, Emma.
Cool, thank you. We've got a few questions coming through. The first one's in relation to South Erregulla. Do you believe there is any chance of commerciality or recoverability at South Erregulla 2 and 3, or are they to be abandoned and you are simply trying to understand the geology better?
Good question. So one of the key opportunities that we're having, both our internal subsurface team and NSAI opine on, is what does the up-dip nature from South Erregulla 2 look like? South Erregulla 2 was up-dip of South Erregulla 1 and certainly up-dip of South Erregulla 3. there is a rising structure towards the northwest corner of the South Erregulla field. What we are looking to try and understand is, are we in a water to gas transition zone, or is there any evidence of a potential blown trap with residual gas being stratigraphically, retained within portions of the Kingia? So, some of those answers will help us understand about what the future life for South Erregulla 2 and 3 look like. Certainly, there's a lot of surface infrastructure and upper casing which could be used, potentially sidetracked from, should we see some potential there further up dip. So the company's not really ready to draw a line under that either one way or the other. And I think that bit of work, that piece of work particularly, will take quite a bit more time, as we also have to understand what the well engineering looks like and how far we can use, sidetrack off those wells to get up dip, and how much further up dip you can get.
Cool. And a follow on from that, what does the standalone FID on South Erregulla require from here? Does it require more drills?
So the existing well at South Erregulla 1, which flow tested strongly in both the Kingia, as well as having a flow rate in the commercial flow rate in the Wodgina, that well will support the FID for a potential standalone development there. We're just working through with the board at the moment some of the specifics of what that development may look like, and just closing out that reserves and resources review with NSAI to ensure that we have the confidence in the subsurface volumes to be able to support that and support the financing.
Yes. And one last comment from Matthew Walker. He said there's many comments on share forums re the need for additional capital raising. Can you please address this to put it to bed?
Yeah, so in early calendar year 2022, after the closure of the Warrego Energy takeover period of time, where we vended into the Hancock offering for Warrego, and realised I think it was about $136 million of Warrego stock in cash from Hancock Energy, we released a gas acceleration strategy, which had a series of discretionary activities, as well as the intention to try and take 4 sources of gas through the construction and development and brought online by the end of calendar year 26. So that fully funded gas acceleration strategy remains the case, and the discretionary activities will conclude in the coming quarter, where I think we have around about $25 million of drilling costs to incur, and that's against whilst we're generating sort of meaningful cash flows from Walyering as well. So the business remains in good financial health. There is no intention to come to the equity markets in the coming period of time. And, we are looking at financing West Erregulla and South Erregulla from the existing equity contributions that have been made into those projects already through drilling, appraisal and testing.
Cool. We've got a question from Darryl Watts. Woodside have announced a substantial production increase of gas into the domestic market from the 1st of May. How is this going to affect Strike?
Yeah, I think I saw about 54 terajoules a day. So that's, around 5% of supply. We're not actually exposed to the new contracting markets right now. Strike is fully contracted on its firm deliveries from Walyering, and it has some contingent deliveries from the Erregulla portfolio in AGL and South 32, as well as Wesfarmers. So, we're feeling pretty comfortable with the way that those contracts are struck. Pricing in our South 32 and AGL contracts is good, and terms are, fair and favourable to the seller. So we're looking at ways that we can deliver some Walyering gas into potentially those contracts. And then at West Erregulla, the Wesfarmers contract, whilst it will go through a few different contractual provisions between now and FID, we do see that being large enough to be able to support the FID without needing to come to the contracting market in advance of a final investment decision. So to summarise, Darryl, I think that we'll see that Woodside gas come into the market, wash through by the time that Strike intends to return to sign any new or additional domestic gas contracts.
Cool. Mark's got a question on the quarterly reporting for CapEx for the quarter. It's got 19.21 in our CapEx on page 7. and the expenditure and evaluation section of the 5B is 31.9. Can you please help explain the delta?
Sure. So 31 includes costs incurred in the previous quarter that cash was paid out in the current quarter. So we only incurred $19 million of capital expenses in this quarter. However, there were capital expenses from the previous quarter, due to invoicing timeframes and payment times from the South Erregulla 2 and 3 drilling that were paid in this current quarter. So that's the delta that you're currently looking at. The key activities that made up that $19 million was the testing at South Erregulla 2 and 3, the Ocean Hill 3D seismic, as well as long lead items and any other sort of early payments needed to be made into, like, for instance, the L7 joint venture for the drilling of Vollering 7, Erregulla Deep 1, and Booth 1, which is coming in the forward quarter. Hope that helps you understand the discrepancy between accrued and cash out the door.
Well, we've got a few questions from Declan. What was the reason for the Vollering OPEX increasing from 51 cents a gigajoule to 62 cents a gigajoule? Is this associated with the increase of condensate quarter on quarter?
No, it's actually in relation to probably some increased manning numbers that we had during commissioning and then through the previous quarter's production, just to ensure that availability was where we wanted it to be, which, we're seeing the demonstration of that. So we're starting to work through, moving the facility to being unmanned over time. We're also doing some tests on the pressure regimes or the throughput pressures of the facility to potentially bring those down, and that can, increase recovery of the existing reserves as well. So, once we've concluded the testing, we'll then start working the manning out of the facility and then move it to its remote operations, which is exactly what it was designed to do. So there's just sort of, annualized manning costs that were incurred at a certain period of time there, Declan.
And also, can you provide any colour on the 0.16 million of listed equities mentioned in the liquidity section?
Sure. I'll just finish off with the cost incurred as well. The production costs. I forgot to say there, Declan, that it is actually such a small number that, if you do incur one-off costs, that does actually move the number quite materially. I think, you're talking about hundreds of thousands of dollars. So if you incur, a pump replacement or an extra night shift of 50 grand or so, you might find yourself with a materially increased production cost there. So there's obviously a threshold. On the listed equities, part of the acquisition of Talon resulted in us taking a position in TMK as part of the consideration, and that is just the market value of those TMK shares that we took ownership on in late December last year.
Cool. Are you able to provide an indicative revised cost of the AGIG West Erregulla facility? Is this still a build, own, operate concept?
Absolutely. Australian Gas Infrastructure Group is there to deploy their capital. They're there as an infrastructure owner and operator. So it will be a BOO model development. The costs incurred for a toll, I think we're guiding analysts work on something between $1 and $2 per gigajoule, with the capex incurred by Australian Gas Infrastructure Group. So it's an off-balance sheet development. That between $1 and $2 gives us a range that we're comfortable with at this stage, noting that the repricing and the submission of the formal toll from AGIG is yet to occur. But if you need to do some modelling, that's probably a good range to use.
Cool. Moving on to Ocean Hill and Vollering, what is your view on Ocean Hill being a tight reservoir, given that Ocean Hill 1 flowed 0.7 million scuffs a day from low perm zones? Will you have to potentially frack to get decent commercial flow rates? So
I would, always say that Vollering was the dress rehearsal for Ocean Hill. At Vollering, we'd seen one well that flowed well, two wells that flowed tight gas, and one well that had been drilled into water. As we demonstrated through the application of high resolution 3D seismic, you're able to understand the heterogeneity of the reservoirs and some of the key faults, as well as structural closures that are controlling reservoir quality. We expect the application of 3D at Ocean Hill, knowing that there is a decent sized 700 odd metre gas column there, as well as sands that had exhibited some form of conventional levels of porosity, that we'll be able to place the appraisal well in the appropriate location to demonstrate unstimulated conventional commercial flow rates of gas from Ocean Hill. So I would always, compare it back to Walyering. That's exactly what we set out to do there. And, Ocean Hill was always the much bigger prize that we wanted to try and apply those learnings to. I think Walyering has surprised everybody involved with just how good it's ended up being. I expect in the coming weeks that we will have completely paid back the capital at Walyering, net of costs, which, should put us in a great position in terms of our return profiles from those Jurassic assets, and looking to achieve the same outcomes at Ocean Hill.
Cool. And on that note, do we have when is Walyering 7 expected to spud? And could you perhaps allay concerns over ongoing deliverability from Walyering 5 and 6, given the potential for water breakthrough at some stage?
Last part first. We're not seeing any material water production from Walyering 5. It continues to be, the same as it was during the well test. So I'm, reasonably pleased with how that's all going. We've got some additional zones at Walyering 6 that will be opening shortly to give additional production support and pressure support at Walyering 6. So Walyering 5, very happy with the way that's going. And as we released in the last quarter, Risk had done its 2P reserve. Risk had done its review on the ASAN production to date, and agreed that it aligned with the 2P reserve booking in the ASAN. In terms of the timing for the spud of Walyering 7, as I said, we expect to get the rig on Thursday or Friday, and then there'll be a sort of rig move, which can take anywhere between a week to a week and a half, and that will then result in the spud of the well as that starts to come together. It should be a reasonably impressive setup, with the Walyering production facility, the Walyering 6 well co-located with the rig, all sort of happening on the same location. And I'm really looking forward to a positive result at Walyering 7, should it come through. There's a lot of similarities between Walyering 7 and Walyering 5. They share a key north-south fault, which is required for the trapping geometry, and is quite likely the conduit of the early charge, which supports the reservoir conditions and qualities being retained there. So, that well will be spud in a week or week and a half. After taking the rig, we're getting some new mud tanks put on the rig, so that's some of the additional time frame that's going on there. And as I said, we'll get that well result in May.
Cool. We've got a question from Dan Ferdinando on the L7 EP437. In the previous webinar, you mentioned that Strike were undertaking a strategic review of the permits. What was the result of that review, and are Strike intending to remain in these permits for the drilling of the Booth and Beacos prospects?
So thanks, Darren. Certainly, as we've highlighted today, we will be participating in the Booth 1 well in around June. The other wells have not, gone through their joint venture processes at this stage, so I can't make comment. You should bring that up with Triangle. However, the Booth 1 well, we were doing a strategic review. I think it strikes, $1.3 billion market cap. There wasn't a lot of value ascribed to the business for those assets at the time, and we were sort of looking at whether there were other ways to generate or realise value for those assets. However, definitely now at $650 million of market cap, there's definitely no value ascribed to those, and potentially continuing to participate through the drilling phase of those wells is the best way to yield a positive shareholder return there for the money that's been invested to date. So we're looking forward to supporting the operator and seeing those well results as they come out. As I said, it's a busy quarter for the company. Seismic production, 3 wells, a lot going on.
Oh, and we've got a question from Aaron Mercer following on from Daryl's question. Do you feel that Woodside's increase of gas into the domestic market would postpone or cancel the West Australian government's desire to allow LNG exports from onshore operations?
Look, I think that the ban on exports from onshore gas, be it primarily for MinRes and for Strike, is around the concerns that there are immediate or emerging shortages in the domestic market supply and demand balance. If those shortages are eased and do not materialise, I would find it difficult for the West Australian government to not want to stimulate the Perth Basin the same way, in similar ways that the Waitsia gas field has been stimulated through the application of export regimes that can be supportive of drilling additional wells or building out larger infrastructure, or continuing with a buoyant exploration program. The Perth Basin continues to be the largest incremental supply of new domestic gas at the latter part of the decade, which is when a lot of the existing supplies will look to come off, as well as a rise in demand related to electricity, gas-fired generation, with the rollout of renewables and the reduction of baseload coal-fired power. If the Perth Basin isn't sort of stimulated to be the best it can be by that point in time, I'm not sure that we will have the volumes there to not only replace the existing supplies, but also create new supply that can support the West Australian energy decarbonisation program and energy transition. So, I would continue to implore the state government to look 5 years ahead of where they want to be and look at the levers available to them today. And if the domestic gas landscape doesn't have a reason to replace restrictions and constrictions on companies, then we should be able to continue to stimulate the way that we want to through the export regime.
Cool. And I think we've got one last question here from Darren Limon. Do you have regular discussions with other providers in the Perth Basin, such as MinRes and Hancock?
Yeah, well, so yes and yes is the quick answer to that one. We are in joint venture with Hancock at West Erregulla, where Strike is the operator, and we'll be developing the West Erregulla asset. So we have daily to weekly engagements with Hancock in around technical committee meetings, operating committee meetings, and just general administration of the asset, as well as potential and the future development plans for West Erregulla as it moves towards its Q3 FID. With terms of mineral resources, MinRes have released their plans to develop their own 250 terajoule a day gas plant. We've got our pending environmental approvals for our 87 to 90 TJ development. So there's difficulties in terms of timing in order to be able to find operating synergies with regards to facilities. But we do speak to MinRes regularly about trying to work with each other to reduce the operating costs of both parties in the basin. That can be demonstrated in our rig sharing arrangement. At the time that we went into the arrangement, neither one party wanted to support the mobilisation costs of the Ensign 970 to the basin. We've shared those, as well as any potential future demobilisation costs. And given that there are ongoing time frame challenges, and it's hard to predict when you're going to get your environmental approvals and well management plans and safety management systems for drilling wells, being able to sequence wells one after the other. We've just seen MinRes drill 2, we're off to drill 2, and the rig will go back to MinRes. That gives us a window in order to be able to close out our approvals, and similarly us for them as well. So good work, good bit of collaboration and cooperation going on operationally there with Mineral Resources.
Cool. And there's one more question that's come through. Can you comment on what Strike is observing in the market re M&A in the Perth Basin, and further to that, whether there are any interesting observations on the Strike register?
Certainly, there has been some material changes on the register since the South Erregulla 2 and 3 flow test results resulted in the share price falling some 60%, which is way is completely overdone in my opinion. That those shares have changed hands, and we have seen a couple of substantial shareholders' notices be published since then, and there's definitely a few nominees that have grown in their holding. If there was anything to disclose of a material nature, the company would do so in line with its continuous disclosure obligations. What was the first part of that one, Emma? Sorry.
Just what you've been observing in the market re M&A in the Perth Basin.
M&A. Look, I would continue to point that Strike has a tier 1 operated portfolio of Perth Basin gas assets that we, are continuing to take through to development. There's a large amount of, we've got more than 50% of our reserves as being uncontracted, and around 40% of our daily production will continue to be uncontracted as we take West Erregulla through FID. So, for those that are looking at wanting new growth or potentially new supply of gas into their own businesses, Strike remains an attractive opportunity. However, outside of that, I think that the main operators as well as asset owners are large businesses with a high degree of intention to take their assets through to full production. So, right now I don't see any sellers of assets in the Perth Basin. Whether there's any buyers out there, that's for you to speculate on, and I'll leave that one with you.
Cool. There was one last question on how much of the Perth Basin does Strike own after the Talon acquisition, and how many targets do Strike have? I don't know if you want me to take that offline and respond to that with a map.
Look, I think we've got around 30 odd leads and prospects in the portfolio across both the Permian and the Jurassic acreage. We've got our hands full with Walyering after the 3D processing there. Obviously, Walyering 7 and Walyering East look really, really good, and we're hoping to put the drill bit into both of those in the near term. Ocean Hill, where we've managed to secure that 3D seismic, that is a huge opportunity for the business. 306 PJs of 2C resource, and then up at the Permian, where we're seeing maybe that there's a bit more complexity there than we had originally perceived. There's been a few different well results. Strike's the last operator in the area to have an unsuccessful result. I'm glad that it's at this end of the story as opposed to right at the beginning. Otherwise, we wouldn't be here and discussing that with you guys. But we're sort of keeping our eye on what the other operators are doing, and every time that there's a well result, looking to absorb that information, and so it can improve the quality of our geological models up there. Quite clearly, the big growth opportunities are Erregulla Deep, which we're drilling with Hancock in the coming quarter, and then Arena and Catathini. I'm not sure when we'll get over there, but you've got to shoot seismic well in advance of when you want to start turning the drill bit. So yeah, plenty going on, and then our operator up at L7 and EP437 Triangle has mapped a numerous number of opportunities up there on their 3D seismic as well. That's probably about it.
Yeah, I think that's probably all we've got time for as well. Thanks everybody. I'll get this up on our website under media, so if anybody wants to rewatch it, it will be available later this afternoon.
Thanks everybody. Have a good day. Bye.